What is up, everyone? I am Charlie Shrem, and you are listening and watching another epic episode of Untold Stories, where twice a week we get to dive deep with some of Bitcoin's earliest OGs, crypto's leaders, the brightest crowns in the box, the ones who are really taking this whole technology forward, and the ones who can give us a lot of insight and information to what's happening in the markets today, really help us understand so many deep, deep topics. I love it because now we've covered so many topics across all spectrums of crypto, but also how other industries can be affected by us. The world, it seems like we're going through some sort of shift and change. Um, where does Bitcoin and the larger crypto land kind of fall into all of this? And today, to talk about that, Ryan Sheftel. Ryan, thank you so much for coming on Untold Stories today.
Absolutely. Well, thank you very much for having me.
Of course, you're the co-founder and CEO of Radkl, a new quantitative easing not a quantitative easing firm, a new quantitative trading firm that brings institutional grade experience from Wall Street to crypto markets everywhere. You're also a partner at GTS, which is a huge company responsible for building and running fixed income businesses across futures, cash, bonds, derivative markets across the whole world. You worked at Credit Suisse, and you really, really understand uh, how institutions will have relationships with Bitcoin and crypto. And speaking of which, it seems like there's a huge policy shift, especially with the Biden administration, which Europe and the other countries around the world have been kind of like out there figuring out what regulatory clarity crypto will have over the next decade, always kind of looking back to the US and saying, what is the US going to do? It seems like there was a huge shift. How do you view kind of the policy shift now and the regulatory clarity that's going to come with the recent Biden announcement?
From our perspective, and I think really what helps provide clarity and certainty and understanding is good for the market. And what's good for the market overall, is good for Radkl. So we support that. We definitely support, the concept of providing some rules of the road and engagement, and really so that people can ultimately, at the end of the day, it's about the investors and the participants in the market and them having confidence. They need to have confidence to know that what they're doing is okay. They need to have confidence that the institutions that they're transacting with, or that certainly if they're having custody of the funds, are good reputable companies and operating under a framework that we've kind of that the country sort of agreed is a good framework to operate under. So the idea of getting towards clarity is certainly a good thing, and it does appear that I like to think of it as we're sort of maybe we're getting like the Uber effect. I remember when Uber first came out, you know people didn't really know, and in many cities Uber was illegal, technically, for the laws on the book. I don't think the laws on the book ever contemplated something like Uber. And there was just a sort of tension between the way that the laws had been written when it was just yellow cabs on the street, and this new innovation that came about. And for a while there, people didn't know. And like I said, I'm pretty sure, and I'm not a legal scholar, but I'm pretty sure Uber was illegal in a lot of the markets it was in. I think the first reaction of some of the regulators was to say that this is a bad thing and we need to shut it down and get rid of it. And then their constituents said, actually, we really like this service. This is a good thing. So over time, the regulators found a way to update and modernize the regulations to make room for something that, frankly, the American public really liked. So I think maybe we're seeing the same thing here in crypto, where it's certainly far bigger and far larger than I think a lot of the perhaps politicians and regulators kind of conceived. And as they dig into it, they realize what an integral part it is of a lot of people's lives, and that we really need to figure out how to make it work.
There's I had like a little bit of a different show written, but there's been a lot of things that are been kind of coming out in our world, especially in the last few days. We saw this new potential bill by Congress called, I think it's called like the eCash Act, and it would create a central bank digital currency, if you will, or at least explore the idea that's a little bit different. And a lot of Bloomberg and Wall Street Journal are praising it and talking about it in a very positive way. And at the same time, I saw just today that Greenpeace and Ripple are going to be spending a lot of money advertising into a very odd thing to try to move Bitcoin away from proof of work. Is there this like background lobbying going on against? Have people said, okay, we can't take down Bitcoin, but maybe we can change out proof of work because that's where the control is decentralized? What's going on here?
Well, obviously, there's a lot of agents
Yeah.
participating, so I can't say I understand all
I
of
know
them, but
you're my
absolutely.
guest today. And I'm like venting to you. I'm trying to figure out what's happening.
We'll figure it out together in real time. Um, no, I think certainly something like a central bank digital currency, right? That's sort of a funny co-opting of it's like taking the term digital currency, which evokes decentralization, permissionless access, and really it's about the polar opposite, right? A centralized, centrally controlled um, means of exchange. So I think what you are getting is in some ways it's like, okay, well, if cryptocurrencies and digital assets have now taken off, people will. I think part of the confusion is oftentimes like in any new phenomenon, and Bitcoin and crypto is still. I mean, it might be old to us, but it's still new to the world overall. A lot of people kind of wear some of the cloak of it to try to get some of the positive allure, even if the goals and things they're trying to do are a little bit different. And in terms of the proof of work, proof of stake, certainly I will imagine with with Ethereum making its transition to proof of stake, that will highlight a lot of the differences. And there's certainly people that have, alternative agendas around, energy consumption and other things. And there'll be a lot of conversation about that for a long time. Um, I don't personally happen to think that Bitcoin's going anywhere or going to change the way that it operates, but as it becomes bigger and more important, more people are going to want to have a say in how it's run. It's, I think, sort of a kind of low key group, decentralized, changing the protocols based upon consensus is
Yeah.
great, but it's going to be under a lot of pressure because as it grows in importance, more people are going to want to have a say in how it's run. And I think those people are going to want to have a say from their positions of power, not from decentralization.
That seems like that keeps happening every couple of years. 2016, 2017, we saw the same type of situation with Bitcoin, and I'm worried that I'm seeing similar rumblings as it becomes, more successful in the front of everyone's mind again. But you're right, and it's like I go back to that famous quote. I think it was Gandhi or someone said it actually. Someone came on the show and said it's wrongly attributed to Gandhi, but I still like attributing to Gandhi. Like first they ignore you, then they laugh at you, and then they fight you, then you win. We've been at like the laughing stage forever. We haven't seen that. And I don't like look at fighting as, oh, there's going to be violence and war that breaks out. But the attacks will come from kind of within. And I think a lot of it comes from, I hate to say it, but like the vested interests that already are existing in traditional world. Similar vested interests that you left to start your own thing. You started Radical. Like, how cool is that? I want to hear like your story and how you got involved. What problem you saw that you decided to start something new.
Yeah, sure. And just to recap on, to kind of yes, and I do believe too. I've read that it was wrongly attributed to Gandhi, but I like it also, so
Yeah.
we'll let it go. And also, it's view it as a good thing, right? A lot of people taking a lot of interest in saying, Greenpeace, and again, I don't know exactly the specifics, but them saying, hey, we care a lot about the environment, and this is a new thing we want to focus on. Like, a lot of the attention, it's a good thing. The attention means that you matter. Attention means that it's important, and it's just naturally what happens when things evolve and grow up. And it's only going to happen more and more. And I think the real key will be to embrace it, understand that a lot of these people are coming from a good place. Maybe they need education, maybe they need understanding, but in the end, it's going to be better for everybody if voices are heard, and there's kind of an understanding and a good environment for everything to operate under. Radical. So Radical was formed by the partners at GTS. So by way of my personal background, I've been involved in the financial markets since '95. Originally started on kind of traditional Wall Street. In fact, so traditional, I like to say my first job on Wall Street was every morning I had to go to the photocopier machine and photocopy a piece of grid paper that had lines on it because that's what we used to write all our trades down. And my job was to photocopy that sheet of paper, put it in the clipboard. Throughout the day, the head trader and myself would write down the trades. And at the end of the day, I would take that clipboard and walk around to all the salespeople that covered the counterparties we traded with, verbally confirm every trade, check it off, and then fax it off to some place. I never even knew where I was faxing it to, where they would actually key
Wow.
it into some VAX mainframe and settle the trade. And like that was the start of my career. So to see that, I mean, people now will, they'll complain if they don't get an acknowledgement of their fill of their order, in under a second. Um, you know, Imagine not knowing for 12 hours whether or not you were actually done. So, that's a world I came from, but I always saw that, having a background in engineering, I could constantly see that everything in these markets were sort of ripe for automation and systematizing. And I just had a history of doing that over and over and over again. I was at Goldman Sachs when, the web and the Netscape browser came out and really took off. And we figured out, okay, how can we have our clients and counterparties trade with us over the web? There was something called a web ET, web electronic trading, we came up with in around 2000 to allow our customers to trade actually mortgage-backed securities. Um, Conform analytics. So seen a lot of change. And to me, you asked the question, I mean, when we looked at, when myself and the partners at GTS looked at crypto and the digital currencies, it just seems so um, obvious to us that a lot of the skills that we brought to bear and the things we had done in the traditional markets in terms of driving efficiency and making, kind of, markets more fair and equitable for all participants is, something that would be valued over in the crypto markets. There's a lot of different venues that cryptos trade on, a lot of different coins, a lot of different tokens, and what participants like us and our peers do in the market is we bring, you know, by arbitraging between different exchanges and running our trading strategies, we can help make sure that the price of Bitcoin on OKX and FTX and Binance are close enough in line that end investors who just have an account on one and just want to click and trade, can feel comfortable they're getting a square
Yeah.
deal, that the pricing's in line.
There's this actually chart that I saw the other day that showed that so Bitcoin used to trade, still does, but like someone would deposit Bitcoin on an exchange and then you'd be able to buy and sell it or trade it against it. And so there's this metric of like the amount of Bitcoin that's leaving exchanges. You see it, I don't know, like on crypto Twitter a lot. It's the amount of Bitcoin that's on exchanges is dropping significantly. The price discovery, uh, people are holding their Bitcoin, and that's definitely happening. And you're going to see it move away from exchanges. But the futures market is growing, and so it seems like Bitcoin trading is moving away from these like online spot settled exchanges into institutional futures market. Why do you think that is?
I mean, every market that has a futures market associated with it, doesn't matter whether it's the S&P 500, oil, gold, natural gas. The futures or derivatives markets, because of the inherent efficiencies in them, tend to always have many multiples of the trading volume and often is a better place for price discovery to occur because there are many. I mean, let's just take the crude oil market. I mean, you or I are not going to transact. It's going to be very difficult for us or even a small size institution to be an active participant in the physical crude market, but yet we have very open access to the futures market. And that allows that kind of open access, standardization, and quite frankly, making it as easy to go long and short so that there's not sort of a bias. And a lot of those features and attributes that futures markets in everywhere have had attract more participants, lower trading costs, lower frictions, and just make it a lot easier for people to find price discovery. Again, same thing. I mean, our U.S. equity markets are premier in the world in terms of listing and liquidity, and yet the S&P 500 futures is can be a major place where price discovery occurs. So that's a very, and that kind of wraps into what you're saying. These are often the same transitions and same features we've seen crop up in other markets, and that's one of the things that really attracted us to it.
I mean, what is the relationship going to be between Bitcoin and the rest of crypto land? Do you see we see two major moves in the past. We saw Terra and Luna, two top projects in crypto, kind of start to look at Bitcoin as this reserve asset that it could use to stabilize their algorithmic stable coins. I don't know what's wrong with my speech today. Is that because it seems like over the years Bitcoin holders are less individual people. As much as I tell people like you need to own 1 to 5 Bitcoin, you need to own some Bitcoin. It seems like Bitcoin is moving into the hands of these institutions, and we see like a $5 million Bitcoin price. Everyone who's holding at least one will be the institution. What will be the relationship?
Between Bitcoin and other assets.
Yeah, it's like I could almost see a world where we're lending out our Bitcoin to other institutions to provide liquidity and access. Is Bitcoin going to be this global reserve asset? Do you think? I mean, you've been around,
Yeah.
like you said, since '95. Is Bitcoin going to be this fad that we're going to look back in 5 years, or are we in position now for Bitcoin to take a chunk of like the inflation hedge or uh, uh, backing this maybe Web3 metaverse world that we're about to enter?
Yeah, I mean, it's a great question, and obviously, Bitcoin appears to have in the crypto. There's inside the crypto space, and then there's versus other assets. Certainly, inside the crypto space, it certainly appears to be the dominant. If we're looking at store of value, if money has a lot of attributes, one of which is store of value, it certainly holds a mantle on store of value right now. And whereas other chains and coins and tokens have gone for kind of ease of transaction and low cost transaction and method of exchange, Bitcoin's been pretty true to its roots. And I know there's been several improvements and there's a Lightning Network, but needless to say, it does appear to me I could certainly envision a world of the future where you're right, like Bitcoin sort of takes that place inside the crypto world of being the digital gold, digital US dollar. Other things are kind of leaning on it, pegging against it, using it for that sort of stability and store of value, while whether it's, pick your favorite new level one, it's solving a different problem, but to the extent that to solve its problem, it needs to have store of value, it could turn around and utilize Bitcoin for that. So it definitely appears inside the digital world, much like, Ethereum kind of took the mantle on smart contracts
Yeah,
and and things like that, and allowing the existence of NFTs. And then you ask an interesting question. Then where does Bitcoin fit in the grander world against other stores of value like that? Whether it be gold or commodities. Gold for kind of a store of value, commodities for the inflation hedge, and obviously the dollar is just kind of a global reserve currency. Kind of TBD. I mean, I think a lot of people, quite honest. Let's be quite honest with ourselves. I think given what people thought Bitcoin should be in terms of an inflation hedge and a kind of safe haven asset, even 2 years ago, if you described the future, the world that we live in right now today, and they would have thought, Bitcoin probably would be 3 times in price. And yet it's seemed to have only increased its correlation versus other risk assets. So the expectation versus the reality has diverged. Now, is that a temporary phenomenon? Is that one off? Is that because it's early in its growth phase? We don't really know. On paper, it has all the right things for an inflation hedge, a place to kind of a place to flee to, like treasuries are when things go bad. We haven't seen it play out, but you know, again, maybe
yeah.
that's just because a lot of people put it in their risk bucket, and
Still,
as it moves from people's risk bucket to inflation bucket, that will change.
it's like a slow moving thing. A lot of people still look at the stock market as a risk bucket. Especially a lot of older people who have been around since when equities and everything moved on to online trading. There's still going to be always like that. And I agree with you. Like it's a slow, it's like a self evident thing, maybe over multiple decades. But something happened with the dollar, especially with this whole Russia-Ukraine war, and I'm trying to figure out, so you had this, like, we have the global reserve currency, we have, institutions love it, and then we saw the dollar become this, we saw a lot of Wall Street firms leave Russia almost immediately, where a lot of people was maybe were looking at the dollar being this neutral thing, not political. Over the long term, was that something that people are gonna care about will the dollar's dominance, like, go down? Is that something that is more of like a mainstream media, stupid, like headline, or is that something, the layperson that we should actually care and worry about?
Hmm. It's a great question, and certainly I'll share my personal 2 cents without saying that everyone should take it with a major grain of salt,
Of
because a lot of
course.
these major things unfold over time. I think that, look, the global financial system is highly interconnected and highly interdependent. So any change is slow and deliberate. Certainly in my lifetime, I mean, there's been a rattling of the cage around pricing oil and other major energies in different currencies, about central banks wanting to diversify their dollar holdings. I mean, even I remember in the mid late
Yeah.
'90s, it was that, central banks were going to dump all their holding of treasuries. And if there's one thing I'll say that the sort of things end up being right and not right both at the same time. I think that the expectation of people for how fast change will happen is way too short. So in the, kind of 1, 3, 5 year horizon, it looks like nothing changes, but yet in the, decades horizon, things change a lot more than people think.
It's a good point. I never really thought of that because it's
Yeah.
only my one adult cycle. Like I went from 20, I got into Bitcoin at 21 and I'm 32 now. So it's like I've only had one decade of an adult cycle.
And actually think about that. So think about it. So you got into the Bitcoin cycle 11 years ago.
Yes.
Okay. So that was 2011. That was 2 years after the financial crisis. The entirety of your experience in Bitcoin has been in a effectively global zero interest rate world,
Yeah,
um,
basically.
which which is really quite actually an anomaly in the grand scheme of things. So it's very true. This zero interest rate world for so long, for over such a sustained period of time, has really, I do think, in many places we probably lost a lot of institutional memory about what happened. That actually interest rates can change, and interest rates, central banks will not all be in coordination globally, and interest rates will go up and go down. And these are a lot of things that I think are outside of the scope of vision of a lot of participants in the market, just because it's been so long since any of them happened. And Bitcoin aside, as central banks appear to be making moves, whether they desire to or are being forced to, based upon what we're seeing on the headlines with inflation, I think it's going to be interesting to see what parts of the world over the last 10 years have been so built around assumptions of zero rate forever that when it's not zero rate forever, kind of things start getting weird. Um, that'll probably be, to me, that's the most interesting thing that'll probably next to unfold is finding out where interesting things happen. Like, I don't know if people don't remember, I'm not going to get the stories totally correct, but like in the global financial crisis 08, 09, there was like a money market mutual fund that broke the buck just because they had loaded up a lot on like Lehman Brothers paper. And if you think about it, at the
Yeah.
time, no one would have thought, oh, well, the problem is going to be breaking the buck of a random money market mutual fund. But that's what happened. And that's what I'm saying. There's oftentimes in our financial system, there's a lot of things that are sort of, for 10 years, you could have built something around an assumption of zero rates forever and been right. And now if you're not right, it's just going to be really interesting to see what breaks as a result.
You're right. Like my whole memory is based on and I'm going back. I remember I was the financial crisis hit the point where like that day when Lehman Brothers crashed and everyone was walking out. I had like a 1 year left of school and I had my own startup. This was pre-Bitcoin and I had an electronics company, a deal a day site pre like woot.com. And I was in college and I was paying my way through school and I remember like when this whole financial crisis hit, this is the world that I wanted to enter. This was the business world that I wanted to enter. And I felt robbed. This was Occupy Wall Street. I felt like shit. I just spent years of my life learning this stuff. And a bunch of people put a bunch of really bad mortgages and mixed it together with a bunch of good ones. And the whole financial world crashed, housing crashed, and no one had any money. No one had any money to do anything. And I felt robbed. And so when I found Bitcoin, to me, I was like, a little bit, not a little bit, I was very gung ho into the whole like we need to change and fix everything. Now 10 years later, we've created this whole new economy and space. I just thank God for Bitcoin. Like if it wasn't for that, a lot of people would be in a very, very tough spot right now. But at the same time, the world is not like it's gotten better. The economy, there's jobs, but it's really hard to pay for things. And tell me if this is true, if you know people in your world, but I remember when I was in college, one person could work. It could be the husband or the wife, and the other person you knew the kid could stay home. You could still pay for the house, take care of the kid. There were a lot of discussions around like maybe the stay at home dad, the stay at home dad. Fuck, two people need to work now. Both partners need to work. What stay at home? Who's staying at home? Yeah, you're staying at home to remote work. You can't afford to have a single person like household earning money anymore. It doesn't exist. Two people need to work or contribute to some way or another. It's like it's a whole different world now. Do you think that's the case?
Yeah, I think it's a whole different. I think you're highlighting a massive generational difference between someone in your generation, let's call it the post '08, and myself. I mean, let's put it in perspective. And you're right. Like when I graduated college, The 2-year note was at 6%. I mean, I remember when I was in college, or when I graduated college, I could take my paycheck, put it in my Vanguard money market fund account, and earn 6% on that,
Wow.
effectively as risk
Live
free
off
as you're
the
going to get.
interest.
Exactly, and that's what people did. And now, so I think a big dividing line to your point is, I think people that grew up, anybody over the age of 40 who remembers that world and got to sort of live in that world and take advantage of it and maybe accumulate a little, savings during that time, have just a totally different perception than someone like yourself, who's, the entirety of, anyone that graduated post 08, the entirety of their earnings career was one of where savings paid zero. I have kids, and it was actually kind of funny to try to explain to my teenage kids about like what the purpose of a bank is, because like they just know a bank is like, well, I let them just hold it for me and they charge me a bunch of fees and then I get it out with my credit card or
Yeah.
my PayPal. Like the idea that like actually you, the individual, you're the bank kind of works for you. It's supposed to be you gave them something of value called money that they were going to invest elsewhere, and they paid you for what you had given them. Is totally flipped on its head. So I believe you're right. You see it in a lot of different things, whether it's the discussion around student debt loan forgiveness. There's a very big perceptual difference, I think, between people in your generation and an older generation, and that definitely ripples through crypto and Bitcoin, where I think it's very reasonable that someone like yourself would say, look at, many of these different places that offer stable coin, you can deposit stable coins, and, they have their earn products that allow you to earn 6, 8, 10%, or DeFi at 12 to 14%. It's logical that people would look at that and say, that's really interesting. That's intriguing. I want that, because they can't get it elsewhere in the traditional financial markets or financial system. So yeah, there is a generational difference. And I think a lot of that's going to, going back to the very first point, I think a lot of that will crop up in the discussions and debates around regulation, where certain people are going to look at it through the lens of, their experience of being able to use the traditional financial markets for savings and earnings, and a generation of people who just don't have that experience, and view crypto and Bitcoin as their method to get there.
Whose idea was it to tie this like imaginary this fund fed rate this fed fund rate to like the rates that we get the most retail of retail customers, like the most retail of retail person who's just keeping a couple $1,000 at the bank to have their rates and mortgages tied to the exact that exact rate? Like whose idea was that? Because that's where it was created, that if you go to like Voyager and you get 9%, you go to Celsius, you're getting 8%, you go to circle.com, the issuer of USDC themselves, who are offering 5%. And to me, it's like 5%, that's a scam. How could anyone offer 5%? How could anyone offer any percent? I need to know, what are you doing with this money? How are you putting this money to work? But like you said, that was never the case. There was always this like, so, and then at the same time, oh, I feel so bad. My brother has been in the market for buying a house for so long, finally found one. He was finally did the whole process of building house and everything. Closing on it was last week, or when they get the closing date, and it was the day the Fed raised the rates. His mortgage rate went up like 0.25%, but that's the difference of $300 a month on his monthly payment. Like that is so significant. So the folks that are pulling the levers in the room know that what they do directly affects people. Anything that you're doing that directly affects people on a day-to-day basis, like that's a very scary thing. It's not affecting some institutional rate.
Yeah, I mean, the central bank's use of monetary policy and rates is, the purpose is to modify and change behavior.
I
If
guess
you just go
so.
back to kind of Econ 101, if they feel inflation's running hot and they want to cool down the economy and lower demand, then exactly your point, a higher rate. If they think housing prices are going up too high or too fast or something like that, then yeah, increasing mortgage rates will lower demand, and that certainly might impact negatively, your brother or specific people like that. But I think that's in some ways that's the intended effect.
But where do those laws, where does that demand go? If you look at the laws of physics, energy can't just disappear or be created, it's transferred. So that demand, does that directly translate into people are just now saving their money and they're getting an interest rate now because the banks offer that? Maybe now that's good for stable coins and for crypto because now there's yield that can be sustained.
A lot of the use of monetary policy is a lot about trading off consumption today versus consumption in the future, right?
Yeah.
If I have $100 and I can put it in the bank and I earn 0% interest, and in some ways I don't really care whether I spend that money today or spend it in the future. But if I'm going to be given, 5-10% interest rate now because central banks have increased rates, well, now all of a sudden, if I want to consume today, okay, okay, or I could have consumed 10% more in the future. Now, mind you, those are nominal rates. We have to take into account inflation, things like that. Certainly, if inflation is running at 15%, even if you're getting paid 10%, you're better off, spending it today. So yeah, it's you're right. Energy can't be created or destroyed, but certainly demand can be shifted in time. Do you want that demand today, or do you want that demand in
Yeah.
the future?
So like money, I agree with that. Money is like money can be is more of like a future value of time. That's like almost like a
Yeah, it's
battery
sort
for
of
time.
every day you're making a decision. I could spend the money I have today. I could consume something today, or I could consume it in the future. And a lot of the use of interest rate and other policy tools is really to try to either push that off into the future, saying, all right, there's too much demand right now. It's driving up inflation. Let's try to push off some of that consumption in the future. And likewise, when the economy is, doing poorly, they try to pull that consumption in. They tell people like to our first point, geez, if you're earning 6% in your, money market mutual fund, well, okay, if all of a sudden you go from earning 6 to 5 to 4 to 3 to 2 to 1 to 0, now all of a sudden you're like, well, why not just buy that car today or that TV or consume today? I'm not getting it, I'm not, it doesn't really matter.
Oh
And
yeah.
that's kind of the whole point.
So like going back to what you said earlier, I've been living in a zero interest rate world for my adult memory. Tell me, pre that world, did prices of things also go up in tandem with the interest rates that banks were offering? Because price now I look back on the past 10 years, I've lived through relative price stability.
Yes. And certainly, and I'm not a macroeconomist, but even from a layman's perspective, the inflation, I mean, we're obviously seeing inflation prints now. We haven't seen this since the 70s. And there's one thing I think when prices go up, 1-2% a year, and that's, people don't really necessarily modify their behavior, but when prices start going up, double digits, they do modify their behavior. And then sometimes you get that feedback loop where you're like, well, if I don't buy this TV today, it's going to cost 15% more next year. Okay, I'll just buy it today. And if everybody does that, now all of a sudden it increases the demand for TVs today. And now the manufacturers can't manufacture them fast enough. So they're like, well, we should raise the prices because we're seeing demand. And then you sort of get into this kind of negative feedback loop. And, I think that's why a lot of central banks around the world are taking this very seriously.
So who's the perfect customer of Radkl? Who are you trading on behalf of, like institutional money? Are you guys more retail customers?
So we trade for our own account. We do not have customers per se.
Oh,
So
very cool.
we're not a hedge fund. We're not a mutual fund. We're not getting paid fees to run money for others. What we do is, we do, really two broad things. We first, we transact and participate in the market, like anybody else could. We are liquidity providers in the market. We transact in the various different exchanges as they exist today. Spot, the futures, perpetuals, etc. And then secondly is, there are a lot of participants in the market who desire to want to deal directly with someone like ourselves, whether it's because they have a large amount of size to move, or just don't want the hassle of dealing on some of the online platforms, and so they'll contact us directly for immediate risk transfer. But in every one of those contexts, our job is where we have our price, we have our view on what the price of things should be and what the price for liquidity should be, and we take the other side of trades and provide that liquidity.
What happens when you hold like tokens that come with like governance responsibility, like DAOs and stuff? So you're holding like, you guys are trading and you find yourself holding like, some epic like a like 5% or like 1% of some outstanding token supply, and they have this epic vote. You think you'll feel like, or not just you, but other companies like yourself, firms, because this is like a new dynamic now. Money was always like, and even I guess you had it with like if you're holding if you're holding stock, and you could be like Carl Icahn, and you could be like Stephen Cohen, you could be like all these different people that want to have a say or vote. Do you think that the token is going to change all that? Do you think that the DAO token or the security token will change on how we do voting or proxy votes or whatever?
Yeah, I mean, DAOs are absolutely fascinating
So
as a kind
cool.
of a human organizational aspect. Yeah, I think you'll see. I think you'll see a lot of things develop. I think certainly for firms like ours, that maybe we come on some governance tokens, and that's not really what our businesses or what we're looking to do. They'll probably become you go back to the original thing, derivatives or other markets where people and I'm just making up. Maybe you drop that token in a new some kind of vault, and it gets split into two, and so one person can have the voting rights and the other person can have the economics of the token, so that
Oh, I never thought about
the
that.
people that really want that where governance is their thing can get access to it. Same thing happens in traditional finance. Obviously, you have index. There's a lot of discussion right now. I mean, there's index equity funds really are intended just to like mirror the index. I buy the S&P 500 in the same proportion, but they actually own the stocks, and those stocks have proxy votes and director votes, and things come up for a vote. And how these all of a sudden you get the kind of the same thing where these index funds are supposed to be in the business of tracking the index for their investors, but now they have this new now they actually vote. It maybe didn't matter many years ago, but now between the largest index money managers, I mean, they represent enormous amount of the votes out there in traditional finance. So you'll see that we've tackled these same problems in traditional finance. I can't say we've come up with a great answer for them yet. Crypto being kind of more innovative, we'll probably come up with smart solutions to divide and slice things up to make it so that really, I think whenever you have a token or anything that combines several attributes in one, price performance, utility, governance. The crypto landscape seems to be pretty smart about how to like figure out how to like divide it up so that the person who wants each part of that the most can
Yeah.
get it.
Yeah, I agree. I agree. You really had me thinking a lot about like the zero interest world that I've been living in over the last, 10 or 11 years. And I'm going to spend a lot of time thinking about how that's going to change maybe like over the next 10 years. But I wanted to ask you a last question, like how long do you think Bitcoin or crypto or really this like technology that Satoshi invented needs to exist for it to become like a self-evident thing? Is it a decade? Is it like one human generation? It's a deep question. It's a lot of people will be thinking about it after, because I
Yeah.
remember asking. I grew up in like in a very religious Jewish community once, and I remember asking like my rabbi, like, how do you know God exists? And he said, well, the fact that we're talking about him right now is his existence or whatever. I remember that it was like something like that.
Yeah.
I don't know if I agree or disagree with that, but it was like, huh, like that actually got me to thinking about self-evident. Uh, so it's an interesting question to leave off with.
Yeah, I think that I think you kind of I think answered your own question previously. It's what you grew up with, right? If a generation today that's grown up with it will never know any difference. That'll be self-evident. A generation,
Oh
many
my
even of
God.
my peers who grew up without it, unless you intentionally get involved with it, you could avoid it. You could avoid it. So it's probably more a function of, that's the same question about cell phones. Like, do you think the world could exist without cell phones? And probably the answer to that question is totally predicated upon when you were born and whether or not you had a cell phone at that point in your, you know, did you have something when you were 10 years old? If when you were probably around 10 or 11 years old, something existed in the world, you probably just conceive that it always existed and it has permanence. So, we're just it's gonna evolve over time. You said it was kind of like in one human lifetime. I mean,
Yeah.
humans that grow up with something, they believe it to be always true.
When I was 10 years old was when the whole Y2K thing happened. So now that I'm thinking about it, I remember saying to myself, like, why is everyone flipping out? I always assumed computers and these things that were around me always had existed because that's what I grew into. That's when your
Yeah,
brain turns into like something that can maintain memory or whatever. Wow, that's really great. Yeah, you're right. Thank you. Thanks for coming on the show today. Really appreciate the time.
absolutely. Great. Well, thank you very much for having me.
Of course. I hope to see you and meet you soon in person.